super important video today because of these two prints right here. You can see $3.7 million out the money SPY call that expires only in a couple weeks. And then this other one here, 1.4 million in premium, also for the 620 strike for that 214 expiration. Believe it or not, this came in earlier today at 3:47 Eastern. Look what happened within the last 15 minutes of the session. As you can see here, we had a major squeeze to the upside and we actually closed the daily at a new all-time high for the S&P 500. So big deal here. Also, we're above my 608.46 pivot. This is a pivot I've mentioned in previous videos, along with my 602.70, which have worked really nicely so far as targets to the upside. But the fact that we got above this level and we closed the daily above is very critical, especially when we have both of these prints complementing that bullish thesis. So what that means for tomorrow and the following week is I'm going to be watching these prints very closely. And I'm also going to be watching this 608.46 level because as long as we hold above it, there's a high chance we can see a continuation move into the 620s next. There's a couple reasons why I believe that. Obviously, first of all, the strike of these is 620. Just because the strike of an unusual print is a certain level doesn't mean we have to get to that level for them to be profitable, obviously. However, what we've noticed by looking at historical data based on these highly unusual prints, which are the highlighted in blue prints here on Cheddar Flow, is that normally we see these go in the money. Whenever there's an aggressive short-dated order with a lot of premium that becomes highly unusual, they typically end up going in the money more often than not. So in this case here, they are shooting for a pretty high extension move into the 620s plus Fibonacci-based price target here would be 625 at the 2.618 retracement. So in this case here, there is a lot of potential upside for this to squeeze, but again, it is all contingent on it staying above my 608.46 pivot. If price is unable to do that, and let's say tomorrow it closes the weekly back down within this level, I'm not entering a position because we're back within this range here. And realistically, we could just see it chop in between this range before it decides if it wants to break down or if it wants to break out yet again. But if we're able to stay above that level, and I'll get rid of all this here to show you, if we're able to stay above this level going into tomorrow, we could see that extension move higher. So I'm interested in longs anywhere around this range, maybe even see a dip under within the first hourly candle and then a pickup to close the hourly back above. That would be a great sign that would show demand back under, and then we can see a continuation move higher. Also, there's a key resistance that's approaching, which is this orange trend line, which I'm sure all of you already noticed. But if you want to know where I derived this trend line from, we can go all the way back to over here. I mentioned this in a previous video, but it starts in this August 7th pivot. There's two pivots technically from around this time period. There's one from the exact low, the major low here, but this ended up getting extended a bit higher up, as you can see, and we rejected it from back here. So that is already void. The next closest pivot would be over here, as I just said, and this one connects very nicely to this low, and you can also see it's respected numerous times around here as a resistance and support. So we are very close to retesting that yet again. This should act as a resistance, and assuming we're able to reclaim back above this, that's clear skies ahead, a lot more upside, likely what these whales are looking at. Regardless if they're looking at the same trend line that I am, they definitely see that there is a bullish opportunity here, especially with a nice daily close at all-time highs back above where this previous range was. So great to see where this closed yesterday. Again, going into tomorrow, it is key that the hourly is able to hold above 608.46. Remember, it is a void setup if we fall back within this range over here, because that could mean a lot more chop like I just drew out. But if we can stay above here, there is clear skies ahead, and these whales should get paid. So with that being said, I do want to reference one concept here that's critical so you guys can understand this going forward for specific prints. These were opening orders, and the reason we know that they're opening is for a couple reasons, actually. First of all, we can see here the existing open interest, so that's the amount of contracts being held for the same strike and expiration, that is less than the volume of the prints. So the volume here, the size of the order under the size tab here on Cheddar Flow, is 14,236. So that's the amount of contracts they bought in this case because they hit above the ask. And then over here was 5,170. In this case here, the open interest is far less than that. So we know that these were bought to open because, again, above the ask print, plus the existing open interest is less than the size of the prints. Also, we can tell this based on the implied volatility, because here the implied volatility is 10.71% for that first order, and then it actually increases in the following order because it goes up to 10.77%. So there's a couple ways to gauge if something was bought to open. In this case here, it definitely was bought to open. And then we can see over here, a couple seconds later, actually, we had this call that hit the bid side. And I actually want to look into that a bit further here so we can gauge. You can see a decent amount of them came in the bid because of this order, and it went back down to 10.75%. So there's a couple potential reasons for this. The first most likely one is they were de-risking amid this pump, because they did add it right before it pumped. Remember that last 15 minute, we had a nice pump over here. They did add the original position at 607.94 over here for that price at 2.61%. So it's possible that they de-risked some of their position, at least the initial ads that they had, a couple seconds later over here at 2.67 for a very measly profit. So that's the more likely scenario. And then they held the rest over here. Potentially overnight, they didn't want to have as much exposure. Or it's also possible that this is just another ad and it hit bid side on accident. So sometimes we see that where it hit bid side, even though the intent of the order was to continue to buy, just like these other ones. So there's a couple potential outcomes. You might think, how are you able to use this data? Well, the main thing that we gauge from this is that their net buying in this case, even if they were to sell this print over here, it would just be to invalidate this order right here. And in that case, they still are holding a decent amount of their position, well over 1 million. So we just have to keep that in mind. Could be just de-risking into the overnight session. We'll be able to know by tomorrow, just based on the open interest, the exact amount that they are holding, because again, open interest today was 5,861. So assuming this does increase tomorrow, which it should, based on what we're seeing, then that will tell us how many contracts they're still holding. And then I'll be able to know what they're thinking going forward. The last thing that I want to mention is the dark pool prints we saw today. So today was a decent amount in terms of singular dark pool prints. So we saw a $506 million dark pool print here, $304 million, and then another $304 million. All of these right around 609.70. So if we go over here, we can see that was the closing price today. So this level is going to be critical going forward. I always like to mark these on my chart. We could just do about 609.72 because again, there's a couple cents give or take between all of these, but this level is going to be critical. We're going to want to stay above it, just like this 608.46 level. So there's a lot of levels we do need to take out still, but with a very bullish daily close like we saw today, definitely is in the bulls ballpark right now, and they can continue from here. Regardless, a lot of opportunity ahead to trade the S&P 500, especially, again, to reiterate, as long as we stay above this 608.46 level, which is just about where that previous all-time high was. Assuming that remains to be the case, and then we can see a nice extension higher, which would be perfect for calls.